right. How's everybody doing? How you doing, Kira? All right. I want to thank.
Doing good, doing good.
Good, good. I want to thank everybody for joining us for our financial wellness ministry, our monthly conversation. The title intrigued me that we're going to talk about tonight. I think it's going to be a good conversation. And if you're watching on Facebook or YouTube, as you do me a favor and go ahead and share the post. Again, if you're watching on Facebook or YouTube, do me a favor and go ahead and share the post. All right, I'm going to put you in the hands of the coordinator of our financial wellness ministry as well as our young adult minister, Kiera Hall.
Hello, hello, everyone. So I'm excited for our discussion tonight. To get started, we're actually going to go to Genesis chapter 41, verses 35 through 36. And then, do you want to share from the Bible tool you normally use, or you want me to just share on my screen?
Either way, whichever you want me to do.
I guess we can do yours. Yours looks better.
You said Genesis 41?
35 through 36.
All right.
All right, so Genesis, actually give me just a second real quick. All right, so we're going to go through Genesis chapter 41, verses 35 through 36. And it says, have them gather all the food produced in the good years that are just ahead and bring it to Pharaoh's storehouses. Store it away and guard it so there will be food in the cities. That way, there will be enough to eat when the 7 years of famine come to the land of Egypt. Otherwise, this famine will destroy the land. So let's look at the scripture. So as we can see, this is Joseph. And basically, Joseph is telling Pharaoh to gather food during the good years and keep it in the cities. And then he said that the food shall be basically a reserve for the land against the 7 years of famine. So based on that verse, we can see that they didn't eat everything they had. They set some things aside. And so this is like our foundation when we have an example from the Bible of having a reserve. And so as Christians, when things go wrong, we can see examples in the Bible where God said, no, set aside, prepare, have a reserve. It's not that we just say, okay, well, let me just pray that God will just fix everything, make it right, that I don't have to have any type of responsibility to prepare. So we can see an example of preparation. So it's our responsibility to prepare. I want to point out that, we don't know, in this example, Joseph had a dream. God gave him wisdom. He was prepared. But sometimes in life, we don't know what's coming and when it's coming. Sometimes things surprise us. And so, we don't know if a sickness is coming. I was just recently surprised with, my daughter having to take her to the emergency room. We eat really healthy. And, we prioritize our health. But even in a case like that, things can still go wrong. There can be issues that arise, whether it be an accident, and things like that. Let me mute real quick and just ask my kids to be quiet one more time. Okay. So it's so important that we prepare, because faith isn't just about like believing that God can save you. It's also preparing, like being a vessel. and being prepared for what God is going to do, and being, a vessel for God to fill. So I want to point that out. The next thing I want to point out is timing. The preparation happens during the good years. And so we're going to bring this around to, financial wellness and what that looks like. But here's the key to life insurance. You can't buy it when you're already sick. A lot of times I find that once that diagnosis happens, or a lot of times people begin to think about it when their parents are way older or sick, and they say, oh, I need to hurry up and get some insurance. But the key to life insurance is to buy it before, not when you're already sick. And so just how we think about Joseph, he used the time when the harvest was plentiful, right? You have to use the good years to set up your protection. And so the good years are now. The good years are earlier. And so that means now, while you're healthy, while you're still working, that's when you build the roof before it rains, right? And then the other thing that I want to point out when it comes to life insurance is, and actually, let me tell my kids to turn this TV down. It's really distracting me. I don't know if you all can hear it, but give me just a second. Okay. And so the next thing I want to point out is just making a shift when it comes to living benefits. And so most people think insurance is only for when you die. I know I used to think that. But tonight I want to share some information with you that some people may not be aware of. And it's new information for me. And it's really a game changer. And then I'm going to share a video, share some testimonials so you all can see the benefit of it. But when it comes to life insurance, we're talking about benefits you can use while you're still living and breathing, and we call these living benefits. And so this is money for you and not just for your beneficiaries. And so, for example, let's talk about critical illness benefit. So, and not every life insurance policy has this. So it's really important that you look and see, okay, what are the benefits of your life insurance? Is it a policy that pretty much only pays when you die and maybe, terminal illness and that's it? Or does it have these additional benefits? So you have a critical illness benefit. And the first type of storm that you could face could be like a heart attack, stroke, cancer. And so these things, they hit suddenly and they hit hard. And so in the insurance world, we call this a critical illness. And critical illness is when you have a critical illness, you need cash fast, for deductibles, for treatment, and so that cash can help you to be able to begin to cover those type of things. Many times, if you have a critical illness, you might not be able to work. And so you will need help, subsidizing or replacing that income, depending on if you have like a long-term, like a disability insurance or whatnot, you still would need help supplementing that. And so that's critical illness. Also, what would be equivalent to like a long drought would be chronic illness. And so what if it's not a sudden attack? What if it's something that lingers? Maybe you can't dress yourself or feed yourself. Maybe you need long-term care. So this isn't critical. This is what you call chronic illness. And the chronic illness, this is the one that usually will drain people's retirement savings the fastest because you need daily care for a long time. And so, one of the things you want to ask yourself is, does my insurance policy have a chronic illness benefit? Does it have, like in the scripture we talked about, that reserve that was set aside? Is there that type of reserve in your life insurance policy that can prepare you for that type of famine, like a chronic illness in your life or a critical illness? And then sometimes there's accidents. And so it's not always sickness. I have seen car wrecks change people's lives, or severe burns, or a coma. I've had family members who are in a coma. And so you were healthy yesterday, but today you could be hurt. And this is what you call a critical injury. And so critical injury, what will happen is the policy will pay out so you can focus on healing and not how you're going to pay for the mortgage. You can actually recover because you're able to access this money from the life insurance policy. And so um, I'm going to play a video to give some examples of people who have benefited from having this type of thing in their policy. But I'm curious if um, anybody already knew about these type of benefits and policies, or are you like me to where you're like, wow, I didn't even realize you can have that type of benefit in a term insurance policy. I didn't even know that that was available. So before we go on, does anybody have any comments or questions or thoughts on what I've shared so far, or even just thoughts on just kind of what you think and just wisdom that you can share to get people to, begin thinking about this and not live their life as if everything will always be okay, and how important it is to prepare.
I think those benefits are pretty good because sometimes it just stresses people out so bad, trying to figure out ways to extend their family members' life, when it's kind of determined medically that their life won't be that long, and so you don't everybody doesn't necessarily have the comfort of just waiting to get their portion, but they can actually utilize insurance that they already have, so it just takes some of the stress off of the family, whether it's a terminal illness or chronic illness, or like you say, some kind of critical thing that just happened all of a sudden. You prepared.
Yeah.
You've prepared for the thing that you couldn't guess. And then but in looking at the scripture though, it's where Joseph was interpreting these dreams, that was happening, and it said that Pharaoh needed to find an intelligent or wise person, and just kind of put him in charge of everything, because the dream's already saying, hey, this thing is coming, this thing is gonna happen, and so if it's coming, it's gonna happen. You can ignore it and just like live life and like everything is fine and nothing's gonna happen, and then when it comes, it puts you in a far worse position, or you can plan for the tight period. And I think sometimes in life we have to make sure that we just not just you only live once and we just living every day like it's the last day, but we're planning for the tight period, because in the end what's gonna happen is we're gonna put ourselves in an unnecessary bind, or we're gonna put people that love us, in an unnecessary bind, because when we did have it, we was YOLOing it, and it wasn't preparing ourselves for the inevitable. And the Bible tells us that things gonna happen.
Sorry about that. I was preparing my screen for what I'm going to share. But yeah, it's really important. And one of the things that people might consider is, if you get a life insurance policy, your goal was to be able to leave enough money so that when you're gone for your family. So if you tap into the living benefits, then the question becomes, well, what if I use all the money and then now I don't have enough to leave for my family? And in that situation, that's why I think it's, important to get the most amount of insurance that you can afford. And so maybe you want to leave, let's say 500,000 for your family. If you want to be prepared, then you might say, okay, well, I'm going to get $1 million in coverage because, God forbid if something happened, I can tap into it. And then I have a large enough of a policy to where I can use some of it ahead of time. and get the accelerated living benefits, but then I still have some more um, to where I wouldn't have to deplete it in an emergency because I have excess insurance. So you can get, a large amount of insurance. Now, something really interesting to me is how affordable it is, because you would think that something like this is expensive, but what I found is that the younger and healthier you are, the cheaper it is. And so, for example, I was able to help someone. I think she was like 52, and she was actually able to get a $500,000 policy for like $70 a month, with all the living benefits, which it was like, man, I didn't even know it could be that affordable. And I was 52-year-old. When I looked at it, that's a healthy 52-year-old. Now I'm saying this rate for 52-year-old. This woman's healthy. Um, she don't have any high blood pressure, things like that. Or so if you do have anything going on with your health, maybe if you're overweight or you have some type of diagnosis, that could potentially cause yours to cost more than someone who is healthy. And so those are all factors to consider, which is why it's always better to get it as soon as possible. Um, while the younger you are, the cheaper it is, and the healthier you are, the cheaper it is. Just to give an idea of what costs look like, when me and my husband ended up adjusting our insurance because our insurance did not have those living benefits. We only had terminal illness. And when we realized we were able to actually get more benefits, we decided to make an adjustment. And, for my husband, for I think it was $43 a month, he was able to get $1 million in a term policy. Um, and for someone even younger, they could get more coverage. And so it's actually a lot more affordable than many people might realize. And then, you know, yeah, so that's pretty much all I want to say on that, is that it can potentially, and in our case, we were able to spend less money and get more benefits because the policies that we had, they were not competitive. And so sometimes when you're some insurance companies, they might not keep up, or they might not be as competitive or offer the benefits, but you'll notice that new products and new policies come out, and they allow you to get more for your money, because it's a newer product and there's so much technology out and things are adjusting and changing, and so many times you're able to improve your benefits when you shop around and check. So I want to share a testimonial. Let's see. I'm gonna share my screen. I'm gonna make sure my sound is sharing. Perfect. Skip ad.
I want to tell you a story about two clients, Daryl and Carol Mosley.
We first met David in 2009. He came to us and offered us a service. And for me, anyone that comes into my house trying to sell me something, they have to earn my trust.
Very straight to the point type of guy. I remember walking in his house, and the first thing he said is like, "You're not making a sale tonight, just letting you know."
So there had to be something about him that earned our trust, and he provided just wonderful guidance and information. We bought those life insurance policies at that time.
So when we first set up their original policy 12 years ago, they didn't have living benefits, frankly because I didn't know about them at that time. And then when I reviewed their policy, we upgraded their plan, added more coverage because they needed it, and we included the free living benefits at that time. And thank God we did.
When he brought up the living benefits, I had never heard of them before.
Our policies are the exact same thing as traditional life insurance, but our policies give you the option to accelerate and cash out the policy if you're to become terminally, chronically, or critically ill. For example, if you're to have like a heart attack, stroke, cancer, kidney failure, get ALS, severely burned, traumatic brain injury, if you go in coma, get paralyzed, if you need in-home care, hospice care, nursing home, if you can't do 2 out of 6 activities of daily living, our policies pay you the death benefit or accelerate the death benefit while you're living. And they had the policy 11 months, and then tragic struck.
Well, always got my mammogram every year. But this year, when I went to get my mammogram, they said, we need to do a biopsy. And they found that I had breast cancer. And it wasn't just in like one lymph node, it was in 9 lymph nodes. And so it made treatment more challenging.
When I met her, she was a brown belt in Taekwondo. She was running marathons. When I sent the nurse out there, she got a preferred rating. Very strong lady.
And nowhere in my wildest dreams did I even think that cancer was living in my body.
It just took everybody by surprise.
Initially, they told us we were stage 1. But as you continue to process, they continue to do more scans and ultimately determined that she was stage 4 and that her cancer was inoperable. At the time, we had been living in a 700 square foot apartment.
This was a couple that had been delaying gratification, investing into their future to one day be able to, buy their dream house and retire. But I think it made him realize this is the time. Okay, now it's time to enjoy the fruits of our labor.
It was immediately on my heart to get her out of that apartment. So I began to try to figure out how we could do that. And that's when it dawned on me that we had this living benefit. I wasn't exactly sure how it worked. So I immediately called David.
So I remember the phone call I got from her husband, Daryl, and it just took me by surprise. We started the claim process that day, and a couple months later, the policy paid out, and they received $317,000 check out of her $500,000 death benefit.
It was a godsend. It was something that was there for us when we needed it.
We have been receiving so much bad news. To get a little bit of good news was really a blessing.
In their situation, they had very good health insurance through the military and through the employer and all that. But what this gave them opportunity to do was to buy their dream home.
I mean, I love our house. I love all the little personal touches that we put in. And I told my husband, I said, I feel comfortable here. My diagnosis and the different things that have happened, it's important to be comfortable.
If they had the traditional policy, it wouldn't have paid out a penny because she's not dead. And that's the power of the living benefits. It's there when you really need it for your family.
That was one more thing to be grateful for. I'm grateful for all my family members. My husband is a full-time nurse. My daughter and my sons. I never imagined my kids helping me with my medical care. Just so much I'm grateful for, especially for my family, especially for the policy and blessings that came with the policy. So, a lot. Grateful for a lot.
Getting a living benefits policy is the most important thing that you can do for your family, period. There's the difference of having access to hundreds of thousands of dollars and having nothing.
You never know what's going to happen tomorrow. Take me for example. I was helped.
It's bittersweet. This isn't a benefit that we wanted, but it was a benefit that was welcomed, and it was a benefit that changed our life.
So I wanted to play that video just to give just a real life perspective of, what that benefit means. and how it really can impact families and make a major difference. I hope that I would never have to use mine, but it's like, why have a policy that doesn't have living benefits when I could have one that does? And so I went ahead. I already had $1 million in coverage, but I went ahead and was like, you know what? Let me apply and see if I can qualify, and I did. Um, for the benefits. And sometimes you may think that something could X you out, but it doesn't hurt to check. And there's so many companies that have these policies with living benefits, like that I just didn't know of. And so I hope that, the same way I learned this, it was helpful for me, and I was able to make adjustments and improvements to my financial plans, to my life insurance. I actually went from paying I want to say 138 a month for my million plus the coverage on my kids to now 73 a month. So I about half of the cost. So I saved money, got more benefits. And then same with my husband, he ended up reducing his costs in half as well. And so that was a huge blessing just on saving money, getting more benefits. But tonight my goal is really to encourage people to just begin thinking about just being prepared. Getting that storehouse ready when times are good, to get in a position to start preparing. And there's so many ways you can start preparing. This is the one that I wanted to discuss this evening. But when we talk about like storing up for seasons of sickness, not just sickness, storing up for our future, and just getting ourselves in position to where we're able to begin to store up and save money. Just in case you are wondering, how could you, get information, you could totally reach out to me or send me a message. And I could do a free quote for you and, get you some numbers, answer any questions that you have. And when I was looking at the list of like all the critical and chronic illness benefits, it was very, what's the word? Comprehensive. Like there was a lot of different things it covered. Like, so it wasn't just sickness, accident, all the different things that I talked about, were all covered. So it's very, very extensive, very, very beneficial, very helpful. And it's just that extra addition, to really be able to help you prepare. So does anyone have any like questions or comments or thoughts on this?
Yeah, I think you gotta have a mindset of a willingness to sacrifice some of your current comfort for later security, and I think that kind of puts you in the mindset of saying, you know what, I'm going to kind of forego some things that I could have right now, just in preparation. And so I think even where their story was concerned, I think his biggest thing is, man, we got this little apartment and we've been sacrificing for so long, just so we can buy this dream home. But now the way it looks like, life has changed. She might not even get a chance to see that big home. And so I know it had to be a major home for him to put her in a place to where she's comfortable, but it didn't have to hurt themselves financially. It is, he maybe, kind of took away from some of the payment, after she dies. But even, just imagine if she, I guess my question is, if she lives, because it's a term, so that means at 75, it's expired. And so I guess my question is what if, I know it's supposed, that's not necessarily terminal what she has is more of a chronic, but what if she lives past 75 to where the term policy would have expired? They're not, they don't have to pay any of that back, do they?
That's a good question. No, they don't have to pay it back. And, my mindset on it is like, if something like that happened to me, I'm going to take all the max that I can out while I'm living. Because in my mind, I'm thinking like, even if I don't necessarily need to use it all right now, can invest it. You know, like you can do whatever you want with it, and you don't have to pay it back. I mean, you could stop paying for the policy tomorrow if you want. You know, and you take the benefit and then just be like, I don't need this policy anymore. I just got my cash out. So you don't have to pay it back. It's your money, and basically all it was is you were paying for an insurance that covers you if you die and while you're living, and an event happened while you're living, and you were able to go ahead and use some of it now.
Yeah.
And here goes the interesting thing. So when we talk about like, you know, term insurance versus permanent insurance, these policies have like a guaranteed conversion for the first 20 years or till you reach age 70, whichever happens sooner. So you're able to actually convert it to a permanent policy. And then also, you know, with my clients, what I do is I look at their budget, and then I get them in a position where they're able to max out on insurance coverage, but then also have coverage for like legacy planning and things like that. And I did a video about it, basically sharing like my paradigm shift, maybe like a week ago on my Facebook page. But I used to be like completely against IULs. Like I was so opposed to it. And I have learned so much that has just completely shifted my mind. And that's like a whole, and actually we have time, so we could get into that as well. And I could play a part of a video that I thought was really good, or I could just talk about it. But when you're talking about planning for insurance, you essentially have like a goal of making sure that when you die, that you're able to leave money for your family. And if you have a term policy, but if you're not investing or anything, you kind of set yourself up to where when the policy expires, your family has nothing. If you have investments, what you're doing all along is setting yourself up to be self-insured. So it's like I have $1 million in coverage, and then in 20, 30 years, now I have $1 million in assets. God forbid if something happened to me, even though my insurance is gone, I still have the $1 million in assets. So ultimately, the goal is to build up the assets so that you don't need insurance anymore. But something really cool with IULs that I've learned is that you're able to have the insurance and a savings component. But one of the most fascinating parts to the savings component to me is that, for example, let's say you have $100,000 of cash value in your account, and let's say you need to borrow 50,000 of it. There's two types of loans you can take on your IUL. So one loan you can take is just like a standard loan, and it basically, if your cash value is 100,000, you took a loan of 50,000, you reduce your cash value, your account balance to now 50,000 because you borrowed 50,000. But there's another type of loan that you can take, and it there's a couple different names for it depending on what company you're with. It could be called an index loan, or it could be called a variable loan. But basically, this is a loan to where you take the 50,000 out, but the 50,000 actually doesn't come from your account balance. So your account balance still stays at 100,000. You take the 50,000 out, but the 50,000 is actually a loan from the insurance company. You don't have to qualify it with credit or anything like that. The insurance company uses your death benefit as collateral. And so basically what it does is, for example, let's say you take this 50,000 out and your interest rate is, let's say 4.5% on the loan. And that year, let's say that the market does 8%, then you actually earn 3.5%. So that's the difference between 8% and 4.5. You earn 3.5% on the whole 100,000. And then your account is credited that with 3.5% on 100,000, that's 3,500, right? So your account is credited 3,500, and you actually never had to pay any interest on that loan. And so basically what it allows you to do is leverage your money, still be able to earn interest on it while you're actually using the money for whatever it is that you want to use it for. And in the IUL, you know, many times it's criticized for, oh, you don't get to participate in dividends. And dividends, when you look at the stock market, that could be a difference of 2 to 4% that you're missing out on when you don't get to participate in dividends. But the key, Alexa, stop. Oh, sorry. But so walk away and get off of that, please. Turn it off.
And for Wednesday,
Alexa,
tell
stop.
me a Harry Potter joke.
So don't do that. I'm in a meeting. I completely lost my thought track.
He wanted to
Alexa, stop.
Writing that.
Sorry, my kids are talking to Alexa. But yeah, and so what it does is it gives you this benefit to be able to leverage money, still have it in a place to where you're able to earn money on your money, have it working for you, but then you're using it. And I've seen some phenomenal examples of people like really being able to leverage their money. And the difference is, let's say that you had this same 100,000 in mutual funds or stocks. If you took that 50,000 out, you would no longer earn interest on the whole 100,000. You'd only earn it on the 50,000. And then on top of that, you would pay your taxes on the, that increase that you just made. So you're going to pay taxes. Now, if it was in a Roth IRA and you follow all the rules, you're over 59 and a half, you've had it for at least 5.5 years, then you would pull that out tax-free, but you would no longer gain interest on that money. And so an IUL really puts you in a position to where you're able to have an insurance benefit. And then also, in many, I'm not going to say all IULs because every company's different but you can also have these living benefits on IULs as well. The critical, the chronical, the ones that I saw, they have it. The critical illness, the chronic illness, and the terminal, and different things like that. And so when you sit with like a financial professional, they'll actually be able to help you to, really get a solid plan in place that's, that thinks about all of your goals, the legacy goals, the short term, the being prepared for the sickness or injury that comes up in just all the different arenas. And many times with my clients, what I do is once I figure out their budget, I will many times stack it where they have like a term and an IUL, and they have a mixture of term and permanent, because what it allows you to do is up front get way more insurance for a lower cost, but then also be set up in the long term to be able to, have legacy, have wealth, and be prepared for your family. And then what's really cool is the money from the IUL, you can take that out tax-free as loans, have it still working for you, but then also, let's say, and this is not in every IUL, it has to be structured properly, but let's say your account has grown and you have $1 million of insurance in your IUL and you have 500,000 in cash value in your IUL. With some IUL policies, when you die, your family's only going to get the $1 million. They're not going to get the $1 million and the 500,000. But if you have it set up, and I'll say you would set it up differently for different goals. But if you want to set it up to where your family can get the cash value and the insurance, you can have it set up that way, and your family would get all of it tax free. And I think that's one of the most amazing parts about that, because when we die, if we have wealth and it's not coming from insurance policy, many times our family's gonna have to pay a lot of taxes on that money. But if we do have it, set up right, we can, save money on taxes, keep money for our family, and just really be in a better legacy and financial position. So I've been learning a lot. I have a really cool AI technology that I'm using to help me run financial needs analysis for people. And then I'll also put together like a really cool report for my clients, like really nice, like kind of like a PowerPoint or a PDF, but it kind of looks like a PowerPoint. And it will go through all the different areas with debt and different things like that. And basically help people to be able to just maximize their finances and be more efficient. But yeah, so it's a really interesting topic. I think the best thing you can do is get with a financial professional like myself, start exploring, checking your options, make sure that you're maximizing. And maybe you're in a position where you can save some money. Maybe you're in a position where you're not getting all the benefits and you can make an adjustment because you're still healthy. And believe it or not, even if you're not the healthiest, you might be surprised. You might qualify for some stuff. And really, everybody can get insurance. It's just the healthier you are, the better insurance you can get and the better options you can get. Because I've helped people get coverage who've had 4 strokes and got a lot of health issues going on. They're still able to get coverage. But when you're in those situations where maybe you're older and you've had health challenges, many times it's going to be way more expensive. And you can't get, it also might put a cap on how much coverage you get because of the health issues. And so, it's really beneficial to look at these things when you're, younger and healthier. Let me see. I think we have a little bit of time. I am going to pull up another video that I thought was really good. And just play a portion of it, not the whole thing, but I think it really be worth it for you all to check out Myron Golden on YouTube. He's a Christian and he's got a great testimony. He does Bible studies, but he also does talks on finances as well. And he
ChatGPT, can I make?
He has this book called From Trash Man to Cash Man or something like that. Basically, it's awesome come up testimony where he was able to really turn his life around, and he shares all the principles that he used to be able to do that. So I'm not gonna play the whole video, but I'm gonna fast forward
Money online with $0. Yes, you can.
that I thought was really good, where he talks about like the IULs. And let me see, pull up, and let's see if I'm able to.
Change back, right? So I'll give them some shekels and they'll give me.
Before I went to.
Let's see.
See, I grew up without.
What's that story?
I will. I grew up without.
So I'm gonna fast forward a little bit.
And she said, and it was right before the stock.
I got tired of just following these big companies. Yeah, the companies were big, just like big banks, small houses, right? The companies were big,
Right.
but all these people that they were supposed to be serving, they were not like doing better financially. And even the people who worked for the companies weren't doing better financially.
Let me see.
Take it out.
Wow.
And now they've really gotten bold. They set a new rule that say if you die, you can no longer stretch that money out over your lifetime. We want all of that money back. Typically, when your children are at their highest income earning years, we want all of that money back within 10 years so we can charge you the highest tax rate on that money.
Wow.
That's gangster. Now, you think you've been scammed? That's a scam. The government is scamming you every single
So
day.
basically what they're talking about is like the RMDs and just some of the rules when it comes to investments that you can't really get around, like the government is going to get their money. But through insurance, you are able to kind of get around some of these rules. But let me
That means
see
you're
if I
going
can
to
find
pay
it.
$4,000 in.
Let's see if I
And
can find it.
then they loan you that same money back on
Let's
at
see.
Wells Fargo or Bank of America or Chase Bank or whatever bank you bank with is only up to $250,000.
Because I'm one of them now.
Okay.
So I can't teach something that I don't know. I can't go somewhere that I've never been before. I
So
can't, you know,
good.
so that's great. Yeah.
Good, so good. So let me ask you this.
Yes.
Share with these people how they can become their own bank,
Okay, this is the part right here.
like create tax-free income.
There are several ways to do it. First off, you got to be a master. And somebody write this down if you're listening live or even if you're in the chat. Write down the word leverage. Write down the word leverage.
Leverage.
You have to be a master at leverage, okay? Which means you have to be great at using other people's money, other people's time, other people's systems, other people's authority, whatever it takes, other people's skills, other people's everything. But when it comes to money, like you got a bunch of equity sitting in your house,
Why? You're earning 0%. Use that money to make you wealthy, okay? You got a bunch of money in a brokerage account. Did you know that you can even borrow against some of that money into the brokerage account? Real estate, you can borrow against that. Life insurance, that's what I learned from the wealthy. That you can actually put money into a life insurance policy. It will grow completely tax-free, which means no taxes.
And the money that you put into it, like the money you pay into it is tax-free, right? And then it grows tax-free, right?
Grows
I just want to
tax-free.
make sure I understand. Okay, go ahead.
So depending on how you structure it, if you structure it the right way with the correct LLCs or business accounts are structured, it can be that way. But you have to make sure that you talk to somebody that know what they're talking about, or else you're going to pay a whole lot more taxes that you didn't have to pay, right? So what's going to happen is it's going to grow tax deferred, and get this, it's unstructured loans. What that means is that you can come in at any time as long as you got enough money in there. They don't check your credit report. They're not checking if you got a job. They're not checking your income. If you got the money, you can use it to borrow against it. They're not making you wait. It's within 2 days, you got the money to borrow against. You can get it you can put money in, and literally, if you do it right, within 30 days, you can immediately start to borrow against that money. What that's doing for you is helping you make money 2 to 3 times off the same dollar. So
good, Marvin.
One more thing, this is going to be a powerful thing. It's also interest only. What does that mean to you? It's interest only, which means if you structure it the right way, they don't even charge you interest for 13 months. So that means that if I pay it back before 13 months, I never paid any interest on that money, which means if I borrow money from my policy, let's say I borrow $50,000 and I flip a property. I flip that property, I actually pay back the profits within that 13-month time frame.
Pay off the $50,000.
I pay off the $50,000 within that 13-month time frame. Not only did I continue to make money off of that account tax-free, but I also made money on a real estate property, and I paid the money back, and I paid no interest at all. So it was basically an interest-free loan. If I'm loaning money to other people who are doing real estate, I can actually loan money out. People do hard money lending. I can be a hard money lender. I can still make 5 to 6% on my money in my insurance account tax-free. I can, when I give them a loan, there's no taxes. They pay me back the loan, and then plus interest. And I paid my insurance company back, which gave me the collateral capacity to loan out more. And then one more thing, this is powerful. The money grows the same in those policies, whether I borrow against it or not, which means that I better borrow against it, or else the insurance isn't the becoming your own bank. It's the mentality, it's the concept of what's becoming your own bank. An insurance policy is not going to solve your problems. If you understand how to work it, and you understand how to master it, and you understand how to leverage your account, that's going to master your money. So give you one real quick thing that I did really quick. So you know about the option play that I did. I'll tell them about it.
Oh, yeah.
So one of the things Myra told me is to put my money into a brokerage account and have it ready. So what I did was I had my money into a brokerage account, and I actually took some money from my insurance policy too, because it was going to keep growing, put it into a brokerage account that's double leveraged already. So when GameStop, that stock went way up, I said, there's no way that the big guys are going to keep letting this happen. It's going to go back down the next day. So I did what's called bought or put, but I used the money I borrowed from my insurance policy. It was actually $100K. I'm not recommending you do that, but it was $100K, and I actually put it on GameStop going down by 100 points. The reason why I had the confidence to do that is because this is the powerful thing. If I had not necessarily hit on that call,
Looking for an easier way to get that LLC next to your business name? Say hello to Taylor Brands. Just go to their site, enter your LLC.
if I would have lost the $100,000, I truly wouldn't have really lost it. Although I lost it, I didn't lose it. What that means is, if I didn't hit on that, yes, I don't have the $100,000, but it's still in the insurance policy as if I never touched it, growing tax-free, and I don't have to pay it back. You don't have to pay a loan back, you all. It's simply subtracted from your death benefit when you die.
Okay, so let me, and I know so I know you're probably pulling your eyebrows out like with excitement right now, right? How do I do this? This man is awesome. Is this recorded? Yes, it's recorded. And so let me break something down to y'all. When he says you borrow the money out, let's say you have $100,000, let's say you have a $500,000 life insurance policy, and you borrow $100,000 from the $100,000 life insurance policy. Now, if you died, your family's only going to get $400,000 instead of $500,000. They're not going to have to pay the $100,000 back.
Yep.
Okay, so you're borrowing against the death benefit. That's what he means when he says that.
Right. So, and that's correct. I want to make sure I clear it up. the collateral is against the death benefit. When you're borrowing, because I guess some people get confused by this, it's only based off the money that you put in first. So you have to put the money in, and you can only borrow up to what you put in. But your death benefit is always much larger. So if I have a $100,000 cash value, I got a $500,000 death benefit. So if I borrow $80,000 from this cash value and don't pay it back, 500,000 minus 80,000 plus interest is subtracted from the death benefit. Your heirs still get that money tax free. So I knew that if I lost that $100,000, I didn't really lose it because it still would go to my heirs minus that amount of money. My heirs lost it, but I didn't lose it. Right. But because I hit on it, that's $300,000 that I earned in a day. I paid my insurance company back, so that it allowed me to increase my borrowing capacity in the future.
So let me help you understand a couple of other things too. That he didn't he covered, but because he knows it and you haven't learned it yet, it's new to you. So understand this. He said the stock went down and he made 300,000 points. And $300,000. And I know some of you are thinking, but wait a minute, I thought you make money when the stock market goes up.
Thank you for clarifying that.
So here's how it works. Do you make money when the stock market goes up? Do you make money when the stock market goes down? Or you make money when the stock market goes sideways? And the answer is it depends on your position. If you're in the right position when the stock market goes down, you can make a boatload of money. I literally made six figures today because the stock market is down like hundreds of points.
He showed me this year. I was like $100,000.
Yeah, 140. Well, that's 140. Last time I was up $140,000 today because the stock market went down. Right? So why? Because I positioned myself to make money if it went down. When it gets ready to bounce, I'm going to position myself on the opposite side, and when it goes back up, I'll make money again. So I'll get to double dip on that same movement. And so you're not going to learn how to do that overnight, but you didn't learn how to ride a bike overnight. You didn't learn how to use a computer overnight. You didn't learn how to use a telephone overnight. You didn't even learn how to feed yourself overnight. So give yourself some time. And by the way, don't look at it and say, "Oh, this is just too hard." What do you mean too hard? The reality is, you didn't know how to do anything when you got here. So, how can we have one of you as a financial advisor? That's funny. Permanent life insurance, aka whole life cash value insurance, Purify. Thank you for that. So different.
So I'll go ahead and stop it right there. If anybody's wanting to see the whole video, it's really good. It's called How to Become Your Own Bank with Marvin Mitchell, and it's by Myron Golden. I love watching Myron Golden's videos on YouTube. I'll tell you, for those of you who don't know, I was working with a company and had been with them probably for about 8 years. And God was literally just leading me to make a move. And I just started doing some investigating. And it just was like out of nowhere as well. But I just felt peace that that's what God was leading me to do. And so I remember just praying, seeking God, and I just kept having more and more peace, but I didn't have like complete peace. I still was like afraid to make the move shift that God was telling me to make because I didn't completely understand what the shift was. And I remember, putting in my termination request with the company I was with, making the move, still not fully knowing everything. And then that night when I did it, I was just on YouTube searching and I came across this video. And when I came across this video, I started learning so much stuff and I just started even gaining like peace. And then literally the very next day, I remember one of the things in this video, which I didn't show, I heard about it, but was completely confused. And I'm like, how? This don't make no sense. And I remember the next day I had a meeting with my old boss that I used to work with in the mortgage world. And now that I was leaving my business, I was looking for somewhere to change my mortgage license. Because I was like, I still want to be able to use it. So I had a meeting with him, and he actually began educating me on one of the concepts from the video that Myron and Marvin were talking about. And I was like, it's like I just was learning about this. And like, I thank God that I just decided to walk in faith and make the move. Like, I have saved money. I've been helping other people save money who've been reaching out to me. My mindset has like just been open. I've been just learning so much more. It's like I went from, let's say, level 2 in financial education with all my licenses and all the things I know, to now I'm like at level 5, and I'm constantly like learning and growing and searching on YouTube. And the biggest thing I would say is, I think it's so important that we have an open mind. that we research, that we ask questions, because a closed mind could literally cause you to like not have improvements, to not get benefits, to not really maximize reaching financial goals. And a closed mind could cause you to not prepare the storehouse. You know, what if Pharaoh had a closed mind? It was like, oh, we're good. Like, thank God he listened to Joseph, you know, and then they were fine because there was wisdom that came, but you can't just have wisdom and not have action. They took action, they started storing things, and then when the famine came, they were prepared. They did not get hurt and hit by the famine. And so in our life, we are going to have different type of famines. One of those might be just simply a famine of not working no more. And so what storehouses do you have for when you're not working, for when you retire? You know, what storehouses do you have in place for that? What storehouses do you have in place? I pray that none of us ever have it, but you just never know. What storehouses will you have in place for if you become critically ill? Or, you know, I know people who have been asleep in their house and it caught on fire. Like, and then, you know, they got severe burns or they had injuries. You know, what storehouse will you have in place to help you with those type of things? And you know, and one thing, I just switched my auto insurance too, because one of my friends, she started working with State Farm. And I told her, I was like, well, look, I said, run some numbers for me. I said, if you could save me some money, you know, get me the same coverage or better, I was like, I'll switch. And she was able to save me like $100 a month. And then on top of that, she was able to add renter's insurance on for free, because basically if you bundle it, the cost of the renter insurance and then the discount combined for having both products basically zeroed it out. And I was looking around, I'm like, why not have rental insurance? You never know. Like, something could go wrong. Like, you know, my friend who sold me the insurance policy with State Farm, she actually had to run on insurance herself, had a flood in her apartment, and had to use it. And thank God she had the insurance. And so insurance sometimes for some people can feel frustrating or it can feel like a scam. But I think the most important thing with insurance is that you have the right type and the right amount. And so sometimes people feel like insurance is a scam because they thought it covered something that it really didn't cover. And from personal testimony, I can say insurance is not a scam, but you do have to make sure you have the right coverages. So when a problem occurs, you are covered. So for example, if you don't have uninsured motorists and then somebody hits you and they ain't got no insurance, it might feel like your car insurance is a scam if you don't have the right coverage when that event happens. But if you do, I can testify that, you know, you will be super grateful. Now, one thing I testify is this: when me and my husband got our van, we were, you know, trying to cut corners. And one thing we didn't get, which now I'm like, man, I wish we would have. So we didn't add the gap insurance because we were trying to get that car payment down low, you know? And I think it might have been like $30 or so. It wasn't a lot. And now I look back, I'm like, man, now I'm still making payments on a vehicle I don't have because I wanted to cut the $30. We should have just been smarter and got a older vehicle with a lower payment so we could stay in budget but still have all the proper coverages. So tonight, I hope that when you watch this, that maybe you can learn from mistakes I've made and that you can begin to look at your finance and that you can get yourself in position to where when that famine comes, that you are prepared, that you have the right type of insurance, you have the right amount, and that you can be covered and your family could be okay. And if you would like to get a free analysis, if you would like to get help or ask questions, I can help you in regards to like life insurance. I can help you on that part. My company also does health insurance too. We do not do auto insurance, but I have friends who do auto insurance. So I can definitely refer you to someone. But I mean, we're surrounded by people, and I think the biggest thing is like ask your questions. You know, you want to do business with somebody who educates you, who answers all your questions, and don't buy anything that you don't understand. Like, you know, make sure that you're confident, read your policies, Make sure, check for exclusions. Are there exclusions in your policies? Because sometimes people can think they have good coverage and then they have an exclusion that won't pay out if they have a heart attack. Well, that's not helpful at all. And I've seen that. I don't want to get in trouble saying the name, but there's a large employer in Gainesville where they probably employ like half the people who live in Gainesville. And I've seen their policies that people have through them, and it don't pay out if it's a heart attack. And I'm like, boy, that's crazy. And so, because a heart attack is, that's kind of one of the reasons why people might die. You don't want a policy that don't pay out if you have that. And so, yeah, so I hope tonight you are encouraged to get some quotes, make a move. You don't have to do business with me, but I really pray that you will get the proper coverages in place. I pray that you will, begin to look at areas where you can cut back. Maybe you eat out a little bit less so you can have the proper insurance. And then also you can shop around, you might be able to save some money on your car insurance like me. It's really good to check your car insurance like every 6 months. Sometimes companies will give you a discount when you stay with them, but sometimes you can save more money just by being open to looking with other companies, and just shopping around. Don't be afraid to shop around and compare and look around, because ultimately, you want the best for you and your family, and you want to make sure that your money's working hard for you and that you're not, overpaying, and that you get the best thing for your family. So prayerfully tonight was helpful for somebody. Prayerfully somebody who didn't have enough coverage will go out and make the step to get coverage. Yeah, I know it's the holidays, Thanksgiving and Christmas, but don't put it off till after the holidays. Reach out, get covered ASAP, because you just never know. Things happen and we don't know when they'll happen, and we want to be prepared, and we want to be wise. And as we can see, God gives guidance on preparing, not just simply come to him and praying that he'll just make everything right. So he wants us to use wisdom and prepare as well when it comes to our life and our finances. So that is the end of my talk. Prayerfully, it was a blessing to somebody, and people will have some improvements in their financial plan.
All right, wonderful, wonderful. Thank you for being prepared, giving us some very valuable information. Thank everybody that paid attention and got the information. Encourage you to share it with somebody. And Kiera, maybe you can put your information in the chat so that if anybody wants to get in touch with you, they can. Hope everybody is preparing to spend time with loved ones. Slow down this week and spend time with loved ones. And because you never know how much time you have. So go and spend time with loved ones. And I think we have one more activity. We have a Bible study tomorrow night, and then we'll be ready for Thanksgiving. God bless you, and you have a good one.
God bless y'all. Good night.
Right.